Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Asset Entities Incorporated, and let me tell you, the executive bonuses in this one might make your head spin a little, especially when you see how the stock is doing. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for further discussion. So what's the deal? This is a Form 8K, which companies file to announce big news to investors. In this case, it's all about who got paid, how much, and why. We're focusing on the part about the bonuses that the top executives received. Let's get into it. This report is a Form 8K, a current report, which is used to announce important events, in this case happening on April 28, 2025. Scroll entity, registrant name, Cassiter Kent, Entities Ianseng Scroll. The company we're talking about today is Asset Entities Incorporated, a Nevada corporation. They're traded on the NASDAQ stock market under the ticker symbol SST. It's important to know this isn't some small unknown company. This filing tells us it's related to some significant happenings at asset entities. It indicates that something important has happened, requiring them to inform investors quickly. The filing is related to Section 13 or 15(a) of the Securities Exchange Act of 1934, which covers periodic reports. Okay, here's the heart of the matter, the section about executive compensation. This section tells us about the yearly bonuses that asset entities' top executives received. These bonuses were approved by the compensation committee of the board of directors. So a bunch of people sat in a room and said, yep, give them the money. Let's look at who got paid. Arsha Sarkani, the chief executive officer and president, got a $75,000 bonus. Matthew Kruger, who is the chief financial officer, secretary, and treasurer, also got 75 grand, and one got 25 grand. The report mentions that these officers are eligible for annual cash bonuses based on their employment or consulting agreements. So these bonuses are baked into their contracts based on performance. The document ends with a signature from Arsha Sarkani confirming its accuracy. Now, let's put this into perspective. I've looked into Asset Entities' recent performance, and it paints a less rosy picture. The company's stock has been struggling and has lost significant value in the last year. In fact, they've had a very rough time. So the big question is this: does it make sense to give out these kinds of bonuses when the company is struggling? It's a tough call. On one hand, these bonuses might be contractually obligated and designed to motivate executives. On the other hand, it could be perceived as insensitive to shareholders who have seen their investments decline, and there could be questions about the board of directors' awareness. It's also worth noting that smaller bonuses can still be quite significant to an individual depending on their overall compensation package. So you have to look at the big picture here. In my opinion, this is a classic example of a company facing tough choices. They need to balance rewarding their executives with being mindful of shareholder sentiment and overall performance. Okay, that's our breakdown of Asset Entities' latest filing. What's your take on these executive bonuses given the company's performance? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching, and I'll see you next time.